Did you know that our entire financial system is built on debt, fueled by the limitless creation of fiat money? This creates a boom and bust economy, which could lead to a total financial crisis. Is it really stable when compared to the gold standard? Let's get into what makes these two types of money different. Fiat currency is what most countries use today. It's money that isn't backed by anything physical, like gold. Its value comes from the government saying it has value and people trusting that it does. Think of the US dollar, the euro, or the Japanese yen. These are all fiat currencies. On the other hand, the gold standard is a monetary system where a country's currency is directly linked to gold. This means that for every dollar, or whatever currency, there's a certain amount of gold backing it up. Historically, many countries, including the United States, used the gold standard at some point. One big difference is who controls the money supply. With fiat currency, the government or a central bank like the Federal Reserve decides how much money to print. They can increase or decrease the money supply to try to manage the economy. With the gold standard, the amount of money is tied to the amount of gold a country has. This limits how much money can be created. Another key difference is stability. Proponents of the gold standard argue it provides more stability because the money supply can't be easily manipulated by the government. They believe it helps prevent high inflation or hyperinflation. However, the gold standard can also be inflexible. If a country's gold reserves don't grow, it can be difficult to increase the money supply to respond to economic downturns. Fiat currency offers more flexibility. Governments can use monetary policy, like adjusting interest rates or quantitative easing, to try to stimulate economic growth or control inflation. But this flexibility can also lead to problems. If a government prints too much money, it can cause inflation, where the purchasing power of the currency decreases. The value of fiat currency depends on people's trust in the government and the economy. If people lose confidence, the value of the currency can fall rapidly. The value of gold, on the other hand, is often seen as a safe haven during times of economic uncertainty. Historically, the gold standard had its own challenges. For example, the Great Depression was partly blamed on the inflexibility of the gold standard, which made it difficult for countries to respond to the economic crisis. The Nixon shock in 1971, when the U.S. ended the convertibility of the dollar to gold, effectively ended the gold standard internationally. Today, we live in a world dominated by fiat currencies. However, new forms of digital currency, like Bitcoin and other cryptocurrencies, are emerging. These currencies are not controlled by governments and operate on decentralized blockchains. Some see them as potential alternatives to fiat currencies, while others view them as speculative assets with high volatility. This video only scratches the surface. One area we didn't fully explore is how international trade and global imbalances are affected by different monetary systems. Another is the geopolitical implications of currency manipulation and reserve currency status. These are complex issues that require further research and discussion. If you found this video helpful, please like, share, and subscribe to our channel for more videos on economics and finance.